My name is Graham Jennings. I'm the Vice President of Corporate Development here at Nickel Creek. Apologies for my CEO, Diane Garrett, was unable to make it today. I know she wishes she was here, but we're excited to be here and want to thank the 1-to-1 for what is already proving to be a great conference. Now, where's my flicker here? Now, the story of Nickel Creek really is, this story has seen a significant amount of change over the last 2 years. We have a world-class, large-scale nickel sulfide deposit up in the Yukon. This has around 2 billion pounds of nickel, 1 billion pounds of copper, 120 million pounds of cobalt, and 6 million ounces of PGMs. Further, we have great access to infrastructure. We're located right on the Alaska Highway, 3-hour drive from Whitehorse. But really, it's these metal mix that we have itself, which I think is going to make this project really stand out. It's already a unique deposit, but the fact we have this nickel, copper, and cobalt, these commodities themselves are very prime for the electric vehicle revolution that's ongoing right now. And of course, then the platinum and palladium on its side, they provide a very nice kicker for our concentrate itself. Further, we have some large, supportive, deep-pocket investors and shareholders, including Electrum at 26%, RCF at 11%. Tocqueville came into our company for 5% in the fall. And then finally, again, is this new management team. We've seen a lot of changes. Our CEO and President, Diane Garrett, who many of you know, she came aboard about 2 years ago. Formerly, she was with Remarco Minerals, where she took that company from a 20 million Explorco to ultimately being acquired for around 800 million by OceanaGold. But really, before I can get into the company itself, I really need to do a bit of macro on nickel itself. I mean, it's probably been about a decade before any nickel advanced explorer has been presenting to you. And really, the story with nickel on the demand side comes down to electric vehicles. I mean, the stainless steel aspect is always going to be a base driver, and it's been seeing strong support in China, especially as they implement further environmental controls for the low-grade nickel pig iron smelting. But it is the battery drivers that we believe is going to provide the real lift for nickel going forward. I mean, you look at the Tesla battery today, the Model 3, the new one, is what they call an 811 battery. It's 8 parts nickel, 80% made of nickel, 1 part cobalt, 1 part manganese. And as the industry, and we saw a panel here earlier, we've heard, the industry is looking to try and continue to limit the amount of cobalt, and they can replace that more with nickel, which, with the Tesla is 811, Mercedes is talking about having a 9.5.5. No matter what you hear, though, you need cobalt because otherwise those batteries will explode pretty much instantaneously. So current estimates have, I mean, last year battery segment of overall nickel demand was probably about only 40,000 tons, but that's expected to grow by 2025 to around 400 to 450,000 tons. Now I know the panel here earlier also mentioned, okay, well, they don't believe maybe the timelines, but that doesn't really matter when you're on the supply side of the commodity because whether it happens with 2025 or 2030, the restriction is the fact of the commodities themselves, and that's going to be very positive for prices. And we've seen that already. I mean, nickel today just hit over $7. The LME stockpiles are going down about 26% over the last 4 months, I believe. And then with that whole demand growth, another strong factor is the fact that this is supposed to come from, there's a lack of supply going forward. There's been a lack of exploration, obviously, for especially these nickel sulfide projects. Most of the industry has been dominated. 70% of the production comes from these laterite projects, which is Philippine, Indonesian nickel, the nickel pig iron, the low-grade nickel concentrates. But to make a battery, you need a very high-quality nickel. And to get a high-quality nickel, it comes generally from high-quality projects, like a nickel sulfide, which requires simple processing, straightforward crush, grind, float, and leach, and you can have and then you can get the nickel of a high enough grade that you can have that sulfate come out the back end. So when 30% of the production today is sulfides, and we're expecting to see significant growth, we believe there's a really fundamental forces coming in line here for nickel. And then of course for platinum and palladium, really the story just is 85% of the world's production comes from South Africa or Russia. So the fact of our geopolitical jurisdiction being in North America and the Yukon specifically, we're quite excited about. But looking back on the company itself, again, Diane came in around 2 years ago. We realized we needed to redo a lot of the technical work on the project. This culminated in a new geologic model, new resource, new metallurgical results last year, which proved we could produce a concentrate, proved we could produce a saleable nickel, copper, cobalt concentrate. And through the course of that process, we realized there's a potential for more economic advantage if we can show we can produce 2 concentrates, a nickel concentrate and a copper. They offer significantly better payable terms from smelters. And so that's what we did over the last year. We drilled across the deposit, got representative samples, shipped about 4,000 kilograms of material up to Sudbury, where we've been conducting, putting it through a mini pilot plant in partnership with XPS consultants. And we expect those results to come out next month. Those metallurgical results will be near feasibility level metallurgy. And that's a significant de-risking event for this company. And then on the back of that, we expect to have our preliminary economics out in the fall. Obviously, we can't go straight to pre-fees because we need some more geotechnical drilling, which would just be drilling at the side of pit. But this PEA that's coming out, we think we'll be really excited for, and the de-risk metallurgy. So again, it's a large-scale asset, the 2 billion pounds of nickel, billion pounds of copper, the 120 million pounds of cobalt. If you look on this top line basis, this is around 55% tied to nickel, 15% copper, so that's 70% right there, and say 20% PGMs and 10% cobalt. And I'll note here that this cobalt price and the prices used in this deck, that's using long-term consensus prices. When I built this deck about a year ago, that cobalt number was 1%, looking at a $12 a pound cobalt. This is using a $23 a pound cobalt. So depending which analyst you ask, there's analysts out there that have $40 to $50 long-term cobalt prices. And that number moves up significantly into the higher teens, maybe low 20s. So it's a major, this nickel cobalt is a major contributor to our project going forward. This is a look at our project itself. The pit, it's going to be an open pit mine, simple. It's about 2.1 kilometer strike from the northwest to the southeast. But one of the best aspects of this project, again, is the access to infrastructure, which I mentioned earlier. We have a, oops, no, that's not the button. There's no pointer. Okay, so from the deposit there on the left, we have a 14 kilometer all-season access road. Goes to our base camp, which again sits right on the Alaska Highway. And this further gives us access, easy routes to market. As from Whitehorse itself, we're 3-hour drives to our project site, which is essential for a project of this scale and magnitude. We further, when we're shipping concentrate, we can ship it easily to Haines or Skagway, 2 deep sea shipping ports, which then gives us easy routes to market, where we end up doing deals to take our concentrate to Jinfeng or to a smelter in the China, or to across Canada, we can rail it or send it around to Finland. So a lot of opportunities and easy access routes to market, which is going to, is essential positive for this project. But really, of course, none of this would really matter without having the right team in place, and this team really does have a proven track record of creating value and bringing projects forward. As I said, Diane Garrett with her experience at Remarco. But I'd like to highlight Heather White here, our COO. If I have to give a quick pitch on this company, I usually just tell the story of Heather White. She did the feasibility study and built and was mine manager of Voisey's Bay, the last great nickel sulfide mine. After that, she ran Vale's nickel marketing business for 5 years, which represented around 30% of global supply. And then after which she then became Electrum's lead due diligence agent. So when they were making investments, they'd send her up to be part of the, to give the final word. When Diane came in, she brought in Heather as a full-time consultant to work on the project. And after a year of working on the project, she said she wanted to join full-time. So it was a great boon to have her as part of the team. Then James Berry, of course, the chief geologist. He came from Remarco. He's got a lot of experience with large systems and has been integral to, again, reinterpreting the geology here. So that's really about it for the Cole's notes on the company. We have around, I'd say, about $6 million cash today. That's enough to take us through the PEA economics into next year. And but again, we hope to have next month these metallurgy results, and then in the fall we'll have this PEA out. And we're looking forward to getting that into hand investors, because we know a lot of people have been asking us, well, what does this all mean with the metallurgy results? So we're excited for where this project's going to go. We really do believe we have the project for the market climate we're in right now. And thank you.